Hey guys, welcome to this video. Today, let's continue the topic on the fundamentals of the stock market. And we'll talk about the three different ways of making money in the stock market. If you guys don't know me, my name is Austin. And in this channel, we talk about personal finance, investment, and lifestyle. If you enjoy the content, please help me out and like and subscribing to the video. So let's talk about these three different ways of making money. And the first way is called longing the stock. And this just simply means buying a stock. You expect the stock to go up in price, so you buy at a lower price so you can sell at a higher price. It is quite simple, and this is definitely the easiest way to make money. However, many people stop there and they don't actually know that there's two other ways to make money in the stock market. So the second way of making money is called shorting a stock. And shorting a stock means you're betting that a stock will go down. So you make money when the stock actually goes down in price, right? A lot of people and smart money actually short stocks, but not a lot of retail people know about this. So what this means is that you sell a stock at a higher price and you buy it back at a lower price. So in that case, you make the money off of the difference that you initially sold versus the price that you buy it back from. So how do you sell a stock that you don't really own, right? That begs the biggest difference. And honestly, this is probably the hardest concept for people to understand at first. Well, you do this by borrowing the stock, and you borrow it from a broker. So for example, when you short a stock, you actually call your broker and you tell them that you want to borrow some shares for the ABC company for, let's say, $10, right? Which is the current market price. Then the broker will actually lend these shares, which actually come from maybe some other of their clients, but their clients don't know, right? And it doesn't disappear from their account or anything. So let's just say they're sleeping or whatever, right? Then you sell these shares for the $10 that you expected, hoping that it would fall further so you can buy it back. Then let's say in a week's time, after you have sold it for $10, it indeed went down and then now it's at $6. In this case, you can buy the stock back for $6 because you still have the $10 in your pocket when you originally sold it for. So in this case, you can now return that one stock, which is the same quantity amount of stock that the broker lends you, right? You give them back the stock that you borrowed from, but now you have $4 additional in your pocket because you made the money off of the difference that you initially sold. And your broker will just then return the stock to their clients like nothing, as if nothing has happened, right? So to short the stock, you usually need to be in a margin account. You cannot short in any account, and we will discuss margin account in another time. There's definitely a danger in shorting, and many people don't know what this danger is. You need to understand that if you are shorting a stock, imagine how much money can you realistically make, right? Let's say if the stock is at $10, if it drops to $0, how much money can you make? You make $10, right? Because you sold it at 10, now you can buy it back at 0. Of course, that wouldn't happen, but you make that $10 difference. But can you make more than 10? No, you can't, because the stock will never go to negative. So in that case, the maximum you can make is the price of the stock that you sold it at. However, if you imagine, right, let's say you sold the stock at $10, but then next week, instead of going down, it actually went up. It doubled. It went to $20. Then in this case, you still have to buy back the stock. Let's say you had to return to the broker, then you had to buy it back at double the price that you sold it at. So now you actually lost $10 because you have to buy it back and return what you borrowed. And what happens if the stock actually goes even further? Let's say you didn't sell at $20, you want to wait another week hoping that it will go down. And it didn't go down, actually it went up to $25. In this case, now you have to pay $15, so you lose $15 on top, right? So as you can see, this can go infinite. Technically, a stock can go up to an infinite amount versus they can never go below 0. So when you're shorting a stock, you have infinite amount to lose. If you do not sell it and it just keeps going up, you can lose an infinite amount of money. However, you can only make a finite amount of money out of shorting a stock. Longing a stock is the opposite, because technically the stock again can go up infinitely, so you can actually make as much money as whatever that stock goes up to, right? But you can only lose the finite amount, which is the price of the stock that you bought it at. So that's the difference. They're the total opposites. Another issue is that in the long run, naturally the overall stock market will go up. And this is part of the data that we can see, right? Ever since the inception of the stock market, it has been, the overall stock market, right, has been going up. So chances are that if this is a decent company and it has a good history and it'll keep going on the long run, then it is much riskier to short these stocks in the long term. If you hold a short position for a long term, most likely it will start to go up. However, the reason why people still short a stock is because, first of all, you have more options. Not only can you just buy the stocks and wait for it to go up, you can understand that during a bear market, you can sell the stocks and you can make money doing so as well. Plus, when the stock drops, it drops like a stone. Especially if you have seen recently when some of these like big corporations, whether if it's Netflix, Facebook, or any of the tech companies that has been dropping like a stone, it drops super fast. So when you short a stock, you can make a lot of big money in a short period of time. Okay, so I hope you understood the first two ways, mainly the shorting of the stock, which is very important to understand. Now, you may ask, what's the third way, right? Besides buying and selling, how can you make money? Well, in this case, you can actually go flat, meaning that you don't make any position. And a lot of new people coming into the trading and investing space don't understand that. Especially even for me, when I first started, I thought that if I'm in the stock market, if I have an account for trading, I should invest every dollar, because if I don't, that means that's opportunity lost, that's profit that's being lost. However, there's many times where you don't know if it's a good position to open. You don't know if it's good to buy, you don't know if it's good to sell, you don't know if this news is gonna change what the fundamental of the stock market, right? So in that case, it's better to just go flat, to hold out. You know that it's a high risk if you purchase the stock right now. So why don't you just wait until you have a clear answer? By minimizing your risk, by not doing anything, you're saving yourself the cost of losing your money. And in that case, you are making that money, right? So it is very important to understand that going flat is a very important strategy as well. Again, to summarize, we talk about what is a longing a stock, which means that you expect the stock to go up, so you want to buy the stock. We talked about shorting a stock, which is you're expecting the stock to go down, so you sell at a higher price and buy it back at a lower price. And you do this in a margin account. Lastly, we talked about going flat, which means that you just simply don't do anything, especially in a time of turbulence and you don't know where the stock market is going. Let's say if it's fluctuating up and down and you have no idea if today is a good day to trade, then it is much better to just stay put. I hope you enjoyed the video and I hope you enjoyed this content. Again, I definitely need you guys' support. So if you enjoyed the content, please remember to like and subscribe to the video and my channel, because that would help me tremendously. Thank you. Until next time.